Hi everyone, today I want to talk about personal finance. When it comes to personal finance, one thing that most people have is a credit card. And if you use credit cards in a healthy way, then they can actually be beneficial. If you use them in a negative way, then they can be financially crippling. So today I'm going to talk about the pros and cons of credit cards, some cards out there with great benefits, and then the cards that I use. As always, there will be a little bit of jelly right at the end, which is something I enjoyed outside of finance. If you're interested in buying the new Carroll Shelby F-150, definitely like and subscribe. This truck is currently listed to start at $110,000. The supercharged version will come with 770 horsepower. Welcome to the Portfolio Bulletin. Let's get started. All right, let's start with the 10 reasons that you should own a credit card and use it responsibly. First up, one-time bonuses of credit cards can get you quite a bit of money. Bonuses can range from anywhere between $150 to $500, depending on certain spending habits in the first few months. This is the main one that I think of when I think of credit cards, cash back. You can get anywhere from 1 to 6% depending on the type of purchase and the type of card. Reward points is how most cards give their cash back. However, some cards allow you to use their reward points for other purchases. For example, travel points or miles, which brings us to the next point, frequent flyer miles. You can get free miles for your normal credit purchases. Another major one for me is safety. So when you use your credit card and you have an issue with fraud, that credit card is going to protect you in a way that a debit card would not. So if someone steals your credit card and they make a bunch of purchases, that credit card can refund you that money. Whereas if that cash comes out of your debit card, then it's going to be much more difficult to get that cash back, if at all. Another one is keeping vendors honest. So if you buy something online, for example, and it takes a few months to get there and it's not even the thing that you ordered, you can dispute that charge. Again, another thing that a debit card makes more difficult. This one doesn't have as much of a benefit, but there is a little bit of a grace period between when you make a purchase on your credit card and when it hits your statement. That's not the case with a debit card. That money is gone as soon as you make the purchase, which is why you're not as protected when you use a debit card versus a credit card. Insurance, that's basically the same thing as protection from fraud. Universal acceptance. Some situations require a credit card over a debit card. For example, if you're renting a car or staying at a hotel, and even some vendors require a credit card and will not accept a debit card. The last thing is building your credit. So responsible use of your credit card can build your credit. And if you don't have a credit card and you don't have any loans or a car loan or a home loan or anything like that, then you're not going to be building credit. And the first way to start building credit is to own a credit card and use it properly. All right, and the cons. So there are some times that you shouldn't use a credit card. One of those times is when a vendor requires you to pay a fee with a credit card. So paying cash is usually cheaper, and the benefits that you would get from the credit card don't outweigh the fees that you need to pay to use that credit card. Another thing, when you can't pay your balance off in full, the interest charges on credit cards are pretty high. We're going to talk about those later. If you don't have self-discipline with your credit card, then it's probably best not to have one. You need to use a credit card either in emergency situations or use it like you would your debit card and just pay it off every month. Another way that you could manage that is getting a credit card with a low credit limit. That way you can't run up the balance too high. And then it says here, credit cards are best enjoyed by the disciplined, which means if you use it correctly, you can get a lot of benefits out of it, but if you use it recklessly, it will cost you. To further display the dangers of credit cards, this is the bankrate.com credit card minimum payment calculator. Minimum payments for credit cards average between 2 to 4%. So I took a pretty standard $10,000, a flat even number. I took a credit card rate that I have on one of my credit cards, and then I put in the minimum payment. So $200 over 30 years, a $10,000 bill would cost you over $40,000. If we change this here to 3%, it will still cost you $21,000 over the course of 260 months for a $10,000 balance. Then if you do the most aggressive minimum payment, it will still cost you $16,541 for a balance of $10,000. To take that one step further, I did a quick calculation of what it would look like if you invested all of the interest income instead of paying it to the credit card company. So here we have the original $10,000 bill, the same interest rate, the same number of payments. Here's the total payment cost. And then the interest is the amount of the total payments minus the credit card bill. And then the monthly interest here is simply the interest divided by the 260 payments. So that $42.75, if you were to take that money and invest it in an account bearing 7%, which is a very obtainable rate, and you invested that every month for the 260 months, that account value would be $25,919.49. So instead of paying more than $11,000 in interest, you have invested that money and now it's worth $25,000. So the actual difference in value here is a little over $37,000. All right, let's get into some of the credit cards that I recommend. This is the Blue Cash Everyday card. Currently, they have a one-time offer for $200 cash back. They're also offering 0% APR for balance transfers for up to 15 months. So if you do have a credit card that currently has a balance, this could be a good option for you. Then when you get to the benefits, I like this card because it gives you extra points back on all of the things that you purchase regularly. So buying food from supermarkets that we all do, you can get 3% cash back up to $6,000. And then on gas, you get 2% cash back. And then on everything else, you get 1% cash back. American Express does have some other options with better cash rewards. However, they usually have a $95 fee or more, and that's an annual fee. So you definitely have to use it to get your money's worth. This one doesn't have any fees. So as long as you pay it off every month, all of the cash back that you get is profit. In terms of pure cash back, the Citi Double Cash Card is one of the best ones out there. So they give you 2% on everything. There's no limits on anything. There's no stipulations and there's no fees. So it's 2% on everything all the time. It says here you get 2% on everything, but 1% when you buy and 1% when you pay. So if you don't pay it off completely every month, you won't get all of your cash back, but regardless, you will get 2% cash on all purchases. If you look here, they're also doing a 0% APR up to 18 months for balance transfers. Again, if you have a balance that you're currently paying a pretty high interest rate on, this is a good option. You don't get cash back for the balance transfer, and you also pay a 3% balance transfer fee, but 3% over 18 months is a very low interest rate, especially if you have a normal credit card with a 20% interest rate. Cutting that from 20% down to 3% is a major difference over the course of those 18 months. The last card I'm going to mention is the Discover Cashback card. It does say 5% cash back, but it is stipulated to specific categories each quarter. Also, they do match all of your cash back for the first year. They do a 0% balance transfer for 14 months. Again, you pay a 3% balance transfer fee, and then they do 1% cash back on everything else. They do show you here what their categories have been. So January through March was grocery stores, and they did a limit of up to $1,500 in purchases. April through June, gas stations, wholesale clubs, Uber and Lyft. July through September is restaurants and PayPal. Again, all of these have a $1,500 purchase limit. And then October through December is going to be Amazon, Walmart, and Target.com, all online purchases for those retailers. I'm not a huge fan of this because I don't really go to restaurants very much. And I do go to the grocery store all the time. So once I got to second quarter here, I wouldn't receive any extra cash back for going to grocery stores and using this card. And then July, I wouldn't get as much cash back for grocery stores and gas like you would with the Amex card. And then in December, this is actually pretty good because in October through December, you're usually looking for Christmas gifts. So you most likely would take advantage of this. But again, I would prefer to get cash back on all of my purchases to the highest rate possible. So the main card that I use is actually a Navy Federal American Express. It's very similar to the Blue Cashback card. They do currently do a 25,000 point bonus, which is the equivalent of $250. So this card gives you a lot of the same benefits as the Blue Cashback card, grocery shopping, and gas. You can see here it's 3% at supermarkets, 3% gas and transit, and then 3% at restaurants, and then 1% at everything else. They do a no balance transfer fee, no foreign transaction fees, and then no cash advance fees. But the biggest thing here is it also has no annual fee like a lot of other American Express cards. Unfortunately, it's difficult to get this card unless you're a Navy Fed member or someone in your family is a Navy Fed member. You do have to be referred to Navy Fed to get this card, which is why I suggested the Blue Cash card earlier. The other card that I own is the Citi Double Cash card. So I use this card for everything that is not 3 times points on the American Express card. So that way I at least get 2 times cash back instead of the 1 times cash back that American Express offers. So to factor this out into annual rewards, I laid out a few categories here: groceries and food, gas, and then other purchases. Other purchases can include things like bills and obviously anything that's not gas or groceries. Other purchases is probably on the low end. Groceries and food is about right, and then gas might be a little bit high. But just for a ballpark, I did how much I spend on those things per month. I factored that out to a year. This is the percent rewards I get on those things. And then this is the amount of cash that I get back just for using my credit card. So on average, I would get about $672 cash back per year. Again, not a massive number, but when you consider that this is free money just to buy the things that I already purchased anyway, and the credit card gives me a lot more financial protection than a debit card, it's really a no-brainer to use these as long as you can be self-disciplined with them. All right, so the takeaways from today's episode: pros and cons of credit cards. Credit cards give you a lot of identity protection. They give you great rewards if you use them properly. And it can even allow you to pay less interest if you do a balance transfer. And then I explained how a $10,000 credit card bill could cost you more than $35,000 beyond the $10,000 bill. In terms of great cards out there, the American Express offers good day-to-day rewards. The Citibank card offers a flat 2% on everything. And then Discover offers a very niche kind of rewards, but all of them offer a benefit over a debit card. And then cards that I own, I use the Navy Fed version of the American Express card that I mentioned. And then I use the Citibank card. In terms of pure cash back, the Citibank card is the best one out there. And then I did a quick calculation of exactly how much cash you should expect to get back based on my numbers. And with that, let's get to the jelly. So today's jelly is the 5-year-old who got caught trying to drive to California to buy himself a Lamborghini. Says here the 5-year-old was caught driving his parents' car on the Utah freeway on Monday, and apparently he was on his way to go buy a Lamborghini in California. He did manage to make it a few miles on the highway before a trooper found him and pulled him over. The trooper said he thought he was an intoxicated driver, but turned out to just be a 5-year-old. So here's what that looks like.
I'm coming down from college. I don't have service. Did you just put it in the call notes? I'll call her when I get down.
It's at this point you can see he gets a little squirrely here, swerving over to the right, and then comes back over to the left once the sirens go on.
Question: where are you driving to? Trooper Morgan learned of the boy's desired destination.
California?
The boy was headed on a shopping trip.
He wanted to buy a Lamborghini when he got there, and he showed a wallet with $3 in it.
The lesson here is sometimes you got to go for your dreams, even if that means trying to buy a Lamborghini with $3. Of course, I am not a financial advisor. Please consult your financial advisor before making any decisions. And with that, go ahead and like and subscribe if you want to see more content like this, and have a great day.